Okay, perfect. Well, welcome to our profitability tools and tracking webinar. What I'm looking to review today is a little bit about the setups of some of the profitability tracking tools which we have, which are the profit monitors, and how to set them up for parts, how to set them up for the labor, how to actually set it up for the RO, and also take a look at the average labor cost per hour, which is used as your criteria for seeing how profitable you are on the labor perspective. And really, the way that that tool works and why it's so important is that is the way that you can really include your fixed costs, your overhead, your rent, your insurance, your phone bill, all that kind of thing, of course, your payroll. So by really looking at the whole picture of what it costs to do a job, so if it, in order to do a water pump on a vehicle, you're going to have just not only the amount you're going to pay your tech and the amount you're going to pay for cost of goods for that part, but you also need to include the buildings, the lifts, the scanners, the information subscriptions that you guys subscribe to, your bill-to-Scott systems. I mean, all that really is necessary in order to accomplish removing and replacing a water pump. So we've actually put some tools in place that allows you to include all of that so you get the real bottom line profitability. In addition to that, we also have our general ledger reports, which is, again, probably makes us pretty unique in the industry, where we have these financial reports that are in real time that does give you an idea, again, what your profitability level numbers are looking like. And I just want to share a little future feature, which I'm always leery to talk about, but I did actually see that it got finished by our development team on Monday, is we have a cash flow report. And what that cash flow report does is it actually integrates the income statement, the profit and loss statement, whichever you are more comfortable calling it, with your balance sheet, which is, I've always said in training and in past webinars about accounting, that the only real way to see if you're profitable is not just with your P&L statement. You have to also look at that balance sheet. What this cash flow report really ties them together, so you don't have to bounce back and forth, kind of like we're going to be doing towards the end of this part of this webinar, to be able to see exactly how you're doing, what's the health of your business. So we're going to touch on that too, and I'll be writing up some information about that cash flow report in our next newsletter that'll be coming out July 1st. So look for that. So let's start with looking under. Well, let's first open up the repair order and let's see what the profit monitors look like. You can see right here, this is a profit monitor, and it's green. And the reason why it's green is because it says this repair order, using the criteria that I've set up, is profitable. If for some reason I let's just put for fun, again, this is just a pretend invoice. Let's put an expensive part on there. Let's put this radiator on here, and let's say, okay, our radiator cost is $100. Let's say we sell it for $125. So notice it's green down here, guys, because I'm jumping around a bit, but this is our part profit monitor. Now it just turned, close it. Now it just turned red because it's saying we're not meeting our profitability on our part here. So, you're going to have to go ahead and mute that, Walter, because it's giving feedback. Okay, so notice when I get out of this, look at that. So what this is telling us is that, actually, hold on just a minute, guys, sorry. That should take care of that. Good. Oh, I don't know who I'm getting feedback from. Who am I getting feedback from? Oh, by the way, Nick, I just you're in here, and Calvin, you're in there. You're unmuted. Just add a few more people just joined our seminar. Sorry, guys. So I'm pausing here just for a moment to let these people in. So you can see that because now we're selling a part that really is not that profitable, our profit monitor now has turned red. So let's talk about where this is set up. Let's also talk about where this is set up for the profitability of our overall repair order. And let's look at this labor. You see we have a profitability monitor here as well. Let's pull this up a bit. Like I said, I can't pull that one up, but if I click on it, you can see 2.5 hours for this job, average labor cost per hour, and here's our labor rate. And this is our overall profitability. So we know that we're hitting the our profit target, okay? So that's what it looks like. So how do we get these numbers to show up? Well, first of all, under setups, under repair orders and parts invoices, the very first screen brings us to our labor rates, and this is where we have our average labor cost per hour. So this number, you can just say, you know, I know what my average labor cost is per hour because I work with the management company and we've actually gone through this whole rigmarole and come up with a figure, and I just know what it is, and maybe it's $42 an hour. So it's off of this average labor cost per hour that we calculate the profitability of our labor rate. Okay, so now what's important there, this is where we set the cost. Under the defaults link here, at the very bottom on the left, this is where we put in our target. Okay, two very distinct things, but intimately related with each other. So let's jump back to labor rates. So first method here, we can manually put in the average labor cost if it's calculated in another system. We can click on Calculate a Month, and we can manually enter in what our expenses are. And usually if you're just getting started with MaxxTraxx, you pretty much just want to take a pen and paper and kind of get a ballpark. Well, yeah, I spend Yellow Pages, I do marketing through MechanicNet. I spend about $2,500 a month on advertising. I spend this much on my consulting company. This is my gross payroll, and gross payroll is just what it says, is gross payroll, payroll for everybody in your company. And this is maybe your monthly insurance rate, this is how much your rent is. So you go through, and this, again, is really just to get you started, but this gives you a ballpark idea. So once you put all this information in here, we get a total expenses. We, again, manually enter how much we think we make in parts profit per month. And this is just something I usually tell people, just put something in to get started, and we can fine-tune this as we go. So this is giving us, this is an automatic calculation here, guys, where we get our net expenses. What we actually say that our parts profit is going to offset our net expenses, right? And then we put in how many flat rate hours we bill. Now this looks like a dollar amount, but this is actually flat rate hours. And it says, I think I probably came up with something along the lines of, with my staff of 5 technicians, we are billing $650, or 600, I just said dollars, 650 flat rate hours a month. So that is another manual number you need to put in. And that's how I came up with this resulting average labor cost, $38.46. Remember, let me go ahead and click OK. And remember, I took that and I manually overrided it with 42. Well, here I calculated my month. Now let's say my guys, I actually did a productivity report. My guys aren't quite billing that much. Let's say they're only billing $550 a month, flat rate hours. Do you see how my expenses just went up? Because what we're doing is we're taking, okay, all my expenses to pay my guys, pay my electric bill, pay my heat, pay my rent. How do I take all those expenses and divide it by how many hours I'm billing out? And that's where you get this average labor cost. So you can see just by changing this number slightly, you see how this is going to really affect this number? That's why I say let's get a starting point, okay? Now, after you've run the system for a couple of months, and of course we all know it's a fully integrated accounting, all those numbers of your actual expenses are being collected on your general ledger in real time, so you know exactly how much you've really spent, every check you've written to your landlord here, every check that you've written to yellowpages.com or Customer Link. We know exactly how much our payroll is because we've written those checks, right? What the system does, it will grab all that information and it'll say, well, looking at the amount that you actually spent in your company from March of 2010, we're going to come up with our own number. Now, you got to remember this is a demo version for me, But what this is saying is going to come up with its own average labor cost. So look, in my demo system, I've only billed out this many flat rate hours. So let's hope that there is no shop out there that would only bill 36 hours in a month. So let's say, for example, these are all of my expenses. And look at this. This is interesting. It's saying these were my, let's see, let me change this around. Sorry, guys. Let me manually put in flat rate hours. Let's see if this will work. Let's say we billed 500 hours maybe in a month. Okay, that's a little more realistic. And this would be my average labor cost. So it would take my actual net expenses and my parts profit and give me my, or total expenses minus my actual parts profit, and it'll do all this automatic. Now again, you got to bear with me because this is all demo material. Let's look at April just for fun. Okay, so that's changing around a little bit. Again, my flat rate hours are still pretty low. But again, if I just put in, well, that's a little more realistic, but obviously I have way too many expenses. So you can see how you can, over time, fine-tune these here or use the actual numbers from the budget. So, or like I said, some companies know exactly, this is exactly my costs because I calculate it using a consulting firm. So any questions on that? I kind of want to stop in between each one of these sections and make sure I don't have any questions or you guys are if this is making sense. A little feedback on this. What do you guys think? Okay, so let's move on from labor. We're talking, we also talk about parts. Now, parts are done in a completely different area. They are done, our parts profitability is based on our parts price matrix. Now, the parts price matrix, you guys know you can set this up and you can say, I'm going to charge, obviously I am using a cost multiplier method for this pricing. Let's look at this. So anything 1 penny to $4.99, I am doing a cost multiplier and I'm charging 2.75 times the amount I paid for it. So if I paid $1 for a part, I'm going to sell it to the customer for $2.75. Now you have all these different pricing methods that you can apply. But why this is important is because this is actually what drives the profit monitor of the part itself, that little green or red button. Now you guys know as well as I do that if you went into the Add a Part wizard, and let's add a test part, and we're only going to do the ones with the red stars because we're going to only do this stuff that's mandatory. So under pricing, if I say this part costs me $4 and I use my parts price matrix, I check this box, and you can have this checked by default, by the way. I'm sure you guys know that. You can see right here that, you know, if this is an oil filter, there could be a slim chance that I can get away with charging $11. So if I uncheck this and say, you know, I really think I can only get a 2.0 profit multiplier. So what's happening right here? Our little part price matrix that says we should have been charging $11 for that part, we know it's going to be green as long as I charge $11 for that part. But you guys know as well as I do that you can't get away with always charging your target parts pricing profitability, right? So if I were to, let's add this part. We'll just finish this, and it's, what part number is it? I think I came up with 101, right? Click Finish. So it's part number 101. You'll see that when I add this to this repair order, can we do it here? Let's see if we can add it here. Delete this one. Okay, so if I were to add that filter just onto here, see, notice here, I'm green. I'm at 50% profit margin where I want to be. And I put that part on there, 101, that test part. Well, first of all, it's red, see? Because our part profitability, what was it supposed to be, like 62%? See, if it were $11, green, right? But no, the parts price matrix says, you know what? It's set up to only sell for 8, so I'm only going to get 50%. So it's going to turn red. But that's reality. That's why these profit monitors are more of a guide than a rule, because I always admire service writers. I tell everybody that I do training with, service writing is an art. You guys have to use so many abstract skills and just your gut and you're just knowing your customer and evaluating the whole job that you may have to play around with pricing a little bit. So you're not going to get exactly the target that you're looking for, but let's click OK and see what happens. Well, it didn't actually affect our ticket that much. So it's still at 50%, 56%, so we're still profitable. So same thing, if we were to add a larger part, and let's go back to that radiator. I think we'll go with that. Again, this is set at a 60% profit margin. Say if I add this here, this is probably going to bump us up, what, 56, nope, to 61, see? But again, what happens if, you know, I have to give this guy a discount. The net job has to be under $300. See, it's $339.60. So if I know that I have to discount this job to get the business, to get the job, I'm going to go ahead and, I'm still profitable, but I'm not as profitable. So this is these are really just guidelines, but I want to explain where this test part, where this button here is coming from. This is coming from the parts price matrix. So whether or not you keep, you apply that parts price matrix to every part that you have in the system, and whether or not you have to adjust from your target, sometimes you have to do that to get the job. And conversely, you go the other way. You know, this test part, how much I paid for this? $4. Now I'm going to go ahead and charge, you know, $17 for this part. And it happens. You guys get a deal on a part. So I'm 76% profitable here. What's this do to my overall profitability? 51? Bumps me up to 53. So these are our tools and guidelines. So we know how we set up this profitability of our labor, right? We do it through average labor cost. That's how we calculate it here, remember? That's how we got that number. And we know how to do it for a part because it's set up either by the parts price matrix, or if we deviate from the parts price matrix, we're still going to get notification here. But what's most important is really the nets. How do we set this to turn red or green? So let's go back into setups. Let's get out of there. I've got every warning turned on. So under setups, repair order, and parts invoices, remember this, the defaults. This is where I set my labor target, and this is where I set my repair order target. So it says if on my repair order, including in my profit calculation, cores, sublets, supply charges, and user charges, including all of those, I want a target of 50%, meaning I want that button to turn green once I hit the target of 50%. If I'm 49%, 48%, 42%, it turns red. So that's how we turn that light on. Now, a lot of people, you know, when you think about this, do you want to include these other parts in your profitability? You know, some people say sublets, I pass sublets through, or I charge 25% markup on sublets. Well, we might want to uncheck that because that could skew our number a little bit. It depends. Cores, you guys have a cost for cores, and you have a cost that, or a selling price for cores that you charge to your customer if they're not returnable, or if they decide they want to keep their cores. And typically, a lot of people don't mark these up, but a lot of people do. But if you're going to pass through your cores, you know, you pay $10 and to the vendor, and you charge your customer $10. You might also want to take that off your profit calculation. So it's up to you. And then supply charges and any add-on user charges, these user charges are the ones that can be added on to the individual part or the individual labor. You know, it's important to know, do you want to count those? Because and talk to me on this, Rex, that these may actually inflate your profitability. They are making you
user
more
charges
profitable.
because a user charge doesn't have a cost associated with it. You're just tacking it on there, or a direct cost anyway to it. It's built into your overhead if it's a fee that you're having to pay for hazardous waste or something like that. But it's not directly connected to that user charge, so it will raise your profit look on that. So you might not want to put it on there.
Now, if you have a tire fee or something where you're paying the state for what you're collecting, then you've got zero profit on that. Do we have a way of tracking?
Well, but the repair order doesn't know that, because what you're doing is you're writing a check later on at the end of the month for whatever amount your fee was for that. And so these charges are standalone charges on the repair order that aren't associated directly with that payment you're going to make later on. So it doesn't know how to calculate that in.
Got it.
So it would be looking at a $2 per tire profit, right?
Right.
If you included your user charges. That's why some people like to take these off. Again, Rex mentioned supply charges. Now, if we go back up to the very beginning where we talked about average labor costs, because remember, a supply charge is just an expense, right? It's an expense that we pay. Actually, it's a cost of goods. I don't know if we have the expense included up in here. We probably don't unless we add one in. So again, that would be another example. If we include supply charges, this may make us look more profitable than we really are because we don't have a way to associate the cost. That's a good point, Rex. But conversely, sublets, I mean, really, do you get your target? Do you get your target markup on sublets? Probably not. I didn't typically. And you know, you may find that you sublet a fair amount of work out. So some shops may say, yeah, that is actually a profit center for us. We actually have struck a deal up with the guy down the street, and that actually is a profit center. Yes, we do want to include it. And same with cores. You know, some people pass them through. Some people do mark them up. I could see doing that. So, and this Rex, this does have a cost associated with it, right?
Correct.
So these actually are reflected in, you know, they are accurately, let me say accurately reflected in that profit monitor.
Yeah, especially the sublets. If the sublets are done correctly through the purchase of them, then they will have that. And you're right, you're typically not going to mark those up at the same percentage that you do your other labors or your parts. So you would have to adjust your overall repair order target down a little bit if you do a lot of sublets in the expectation of that.
Right. So I've seen it both ways. I've seen people that say, you know what, I just want to go off the parts and labor. I just want to go off the parts and labor on my RO. These guys, I'm going to let them wash it out themselves. I have seen people that just include supply charges. They're like, you know what, I really don't pay that much in supply charges. It's a pretty good revenue stream for me. So I do want to include it in the profitability of my repair order because I charge, you know, I'm in a state that I can do that without itemizing. And I charge 5% up to $25 on every single job. You know what, that is profit to me. So I do want to include it in. It's really up to you as an individual shop to decide how you want to do that. So just a quick little recap. First thing we do is we need to figure out our average labor cost because that is needed to calculate the number, and then under defaults is where we decide when it turns red, when it turns green, okay? Parts, Parts, we have to set up a parts price matrix. Again, whether or not you apply this parts price matrix when you're actually setting the selling price of your parts is not as important, but a lot of people are like, how do I turn that on? How do I turn that parts profitability monitor on? Because I think it just says more. If I didn't have anything included in here at all, I think that little button in the lower left-hand corner in the sales detail information window on a parts record, we'll look here in just a minute, will just say more. So the way that you set that up is you put in your parts price matrix here, and the parts price matrix will turn it red or green. And then the overall, again, the overall, how profitable are you by RO? That's what you have set up in here and tag in here. So those are kind of the 3 steps involved in that. Let's go back into an RO real quick and just review where that information's at. So here in the individual part, when we double click on the part or highlight and click edit, either way, on our sales detail information screen, we have our profitability monitor, right, red or green. And under the labor, actually this is considered labor, but let's highlight this one so it's more straightforward. Double click or again hit edit. Here's our profitability monitor down here. And again, this is calculated out off of that average labor number that we put in. Okay? So that's where we do it for the individual parts, labor, and then, oh, one thing I wanted to mention. Remember I just said sometimes it says more. If I didn't have my parts price matrix set up here, guys, this little button down here, all the information would be in there, but it's not red or green, and it just says more. That's really just more for new users who have never set up their parts price matrix before. And then our main one, which again, if I click this button, here we go, I do get a breakdown, my sales, my costs, any discounts, anything in here. This tells me my profit dollar amount, so I'm profiting 159 bucks on this ticket, and I'm at 41% profitability. So what's interesting, this is 41%, this is 44. Why? Because I have, under miscellaneous, I have a sublet. Actually, let's look under summary. My supply charge. I'm actually including my supply charges. Remember, I said, I'm going to include that. I'm going to check that box. So it's saying, in addition, I'm adding another $6.25. So let's go back really quick to this button. This is 41. This is 44, because this 44 is including that $6 and change supply charge. Does that make sense? So I kind of want to cover that. Now, the other thing that people also use as a tool to track their productivity is when you do close out your daily sales, and often people will, I can imagine how messed up this little report is. If you looked at these reports, you have this paid repair orders with part markup. Now, I know that some people just go crazy over this report if this is skewed. Let me tell you some situations where this report can be skewed. Menu labors. Menu labors will skew your parts profit markup. It'll skew the profitability. So let's preview this really quick. So this is a great tool, but what it is nothing more than a guideline. It's not gospel. But what it's telling us here is that this RO number, and this is a customer, information about the vehicle, net parts sales and our costs, so we actually lost money on that one, net labor. So this is telling me that I actually made a total dollar amount. Actually, no, this is telling me my my total sales, but this is telling me my profitability. So with all this stuff thrown in together, I even have a negative profitability because I discounted this so deeply. Look at, I'm making 100% on that one. I'm making 100% on 75% on this part here, see? So if I were to go to the end of this, it's telling me that I am looking at an overall parts markup here of 77%. Whoops, hit that again. So it's telling me that these are my part net sales. These are my costs here. So they're saying my parts markup is actually 77%. Okay, it looks like I some discounts and warranties in here for 125 bucks. But so this is a good guideline, good thing to see. And where this report is a little bit more interesting on an individual level, and I think I would use it more this way if I reference this report on a daily basis, which I actually never did, but I've talked to shops that do. What's interesting, if you just have one particular ticket that's real low, and again, this is demo material, so you guys got to bear with me a little bit, but if something were negative 6.77%, the most important thing here for me is it just catch my eye. I'd like to know, what exactly happened with this job that this got marked down so far? Did we not take care of the customer well and they complained, so we ended up having to discount out the job? Or, if something just isn't quite at target, what exactly, is this just not a profitable job for us? Working on this Ford Explorer, are we just not making that much money? And then on this one, okay, I like this. This is a profitable job for me. And we might find out this was a diagnostic. So we might say, yeah, diagnostic work actually is pretty profitable. I'm going to have to keep that in the little back of my, back of my noggin, that this is something that's really been good work for us. Now, of course, we do have reports that drill down and give us much more specific information about what's a profitable job and what's not a profitable job, parts and labor sales. We can look at it that way. But what's kind of nice about this report is that a lot of people will look at this at the end of the day and just breeze over to make sure that there's no funny business or notice that there's just a problem. And you may find that one service advisor is not as profitable as the other service writer, because one guy maybe isn't feeling confident enough to say to the customer, well, we've provided a good service for a fair price. I'm not going to discount it. And then you may find a service writer that just bends at the, anybody complains, says anything at all, and they're like, oh, let me give you a discount. So that's how a lot of people tell me they use this report. Again, I personally did not use this on a daily basis. Any input on this one, Rex?
Well, what I wanted to point out is I think the report is misnamed. It says paid repair order report with part sales margins, and in fact, we give them markup percentages, not margins. Those are not profit margins that we see there.
Those not profit margins, you're right. And, well, you know what, guys,
specifically that bottom one down here, 89.98, and half of it is cost. That would be a 50%
profit
margin.
50% profit margin.
And 100% markup.
You know,
just so we're clear on that.
Yeah, no, I appreciate that. If you guys have any questions on the difference between part markup and part margins, we have a pretty good archived webinar that really delves down into that, because they are very, very, very different numbers. And with that being said, I'll tell you right now, my personal preference and what I recommend to all new shops when I'm doing training and setting up is that, you know what, always use a profit margin for pricing your parts, because it tells you what your profit margin is going to be, not your markup. And some people do markup and mark down from list, but that profit margin, I think, is a much more accurate tool to be able to really know what you're doing. Again, this is my little poke on which method I use and I prefer. So most importantly, all this stuff is great, but what really matters is what's your bottom line. And again, this cash flow report, I'm so excited to see it. I haven't actually seen it. I just saw it got approved by programming and development, so we're going to have that hopefully included in this next release. I'm real excited to show you guys that, and I will have another webinar and we'll cover that. But you know what? What's the tool? A lot of people say, well, what's in my checking account? And I cannot tell you how many shops I've talked to over the years, they manage their business by checking account. And that means if there's money in your checking account, you're good to go. But if you've ever had training with me and we've talked about setting up your accounting, I'm the first one that will always say the income statement is very critical. It lets you know, this is for fun. Let's just go back to January. So we're going to look at my whole demo materials income statement. Let's see how pretty or not pretty this is. So it says over that time period, and my time period, by the way, guys, on this report is at the bottom of the report. Let's go back to the top, though. This is what my total income is, my parts, sublet, and labor, okay? And then here's my expenses, which, of course, I have inventory adjustments that skew this number terribly, obviously, here. Again, demo material. So I have my gross sales, and then I have my gross profit, which should be usually, you know, $18,000 probably if it were real. And then I have all my expenses. So I have $13,000 of expenses, taking it out of $24,000. So that what this says is what's my net profit. Of course, I need to go to page 2. And my net profit at the top, so this is my net profit. Now, what's great about this is it looks like we're making money, right? And this may be a closer reflection to what's in your checking account. But the one thing that people always forget, especially new business owners, is that that's all great, but if you owe the Napa store 10 grand, don't spend all this right now. So that's why it's so important to not only use the information that you have on this income statement to see, yeah, you're getting the business coming in, but you need to make sure you're paying your bills. And the way that we track that is using our balance sheet. So our balance sheet is going to tell us we've got this much in our checking accounts. We've got, you know, people owe us this much money. They owe us $700. And look, I got some, these are my current assets. But what's important here, you got to remember, I owe a parts place, payables trade, I owe somebody $4 grand. So again, before I get all excited that I made $11,000 in that time period, I have to remember that I have to pay somebody that back. So again, putting these two reports together, a little bit tricky, and I do have a webinar, it's called Accounting 1, that reviewed some of this, and we actually do have some great questions that came out in that webinar that help talk to this a little bit more. And I think once we get our cash flow report, we're going to revisit this as well. But these are the profitability tools that you pretty much get in MaxxTraxx and not in a lot of other systems, because we have the integrated accounting, and all this, of course, is in real time. These are all real numbers through today. Again, my demo data is a little bit flawed, so I need to clean that up a little bit more for our next webinar. But those are the tools that I really think you really want to be looking at. Let's see if we use the last 2 weeks, if it's a little more accurate. No, I did the inventory adjustment in the last 2 weeks. Let's try another one. Let's do it through January 1. Let's say through like April 30th. Let's try that just for fun, to see what comes up. Okay, this is better. So for example, a little bit better. So my sales of $12,000, my expenses are still, see, I still have inventory adjustments that are skewing my numbers. So I do have some expenses. So this is my gross profit. $13,000 is my gross profit for that time period. And then I have my expenses of $9,000. So it's just showing me, you know, I made gross profit. Looks like after I pay my cost of goods, I have $11,000. Then I pay all my bills, and so I have $2,000 left. So this is really the tool that is going to tell you at the end of the year truly how well you did. And this is why I advocate all the time that people, you know, ease into it. But once you put everything in your system, every check that you write, every payment that you received, you put that in, this stuff kicks out automatically. No more work done. But this is a very, very powerful tool to let you know, are my expenses a little bit exorbitant in rent? Look at this, 70%, 76% of my expenses are going to rent. You know, either I'm going to have to beef up this number and take more advantage of this 10-bay shop, right? Or, you know, maybe do I need to look for a new place? You know, conversely, let's say wages. Okay, this is obviously a pretty low wage number, but, you know, if you notice that you have, you know, $15,000 in wages a month, and you look at how many people you have on staff, and, you know, of course, you're paying the rest of your guys maybe all flat rate. That would actually show up as its own line item. You might want to say, you know, I'm really not making much money, but, you know, I'm top heavy. I'm top heavy. I need to do one or two things. Either I need to pare down my office staff, or I need to increase this number because I've got the production capacity. Now I need to up my production. Maybe I need to hire another tech. Maybe I need to get more car count up. Maybe I just need to increase the profitability per job, per RO. And when you have that many people in overhead, or if you have a lot of office staff, then you need to be maximizing every single customer that walks in the door. So this is why having this information at your fingertips real time, including everything in your business, by the way, which sometimes farming out to an outside accountant, they don't really count everything. This is what makes it a powerful management tool, because it allows you to make management decisions, you know, in a relatively quick response time. And you don't want to wait to the end of the quarter, or wait, heaven forbid, wait to the end of the year and realize, damn, I haven't made any money, you know, and then make changes. But this gives you the ability to look at this month at a time. And we're also coming out with another report, very exciting, I wrote about in the last newsletter, that gives you a month-over-month comparison. So you can see, you know, how did you do last month or last November, and then you hired another service writer. Are you actually making more money with that new service writer? So it gives you that month-to-month look at how profitable your business is, which also works for seasons. I know that depending on where you are located in the country, if you do a lot of AC, you may know that, you know, when I look at January and I look at July, I make my money in July. So what does that tell you? How do you use that for making decisions to run your company better? Well, maybe I need to staff up in the summertime, or maybe I need to increase my marketing in November because I know I'm going to have a really bad January, February. So maybe I need to run more specials. Maybe I need to, you know, mine my customer base, mine them for additional business, or maybe tell people you take vacations during the winter. I mean, it's all those little business management decisions that if you had this information, you would be able to make these decisions intelligently with real data and be able to see, when I make a change in my organization, is it going to result in profitability? So that's really kind of what we're doing with creating the tools to do it at the RO level and creating these tools to be able to do it at the business level. quiet group today. Give me some feedback on this, guys. Was it? Go ahead.
So how does the business, or how does the balance sheet tell me if I'm doing better or worse?
The balance sheet tells you, let's go back to that real quick. So if we go back into our general ledger balance sheet, what this tells us, let me close this down a little bit. This tells me overall, if this is set up correctly, which a lot of people, you know, they don't really have all of their equipment in there. Maybe if they own the building, they may not have their building. They may not have all of their assets accounted for on this list. But it's still a valuable tool. And where this is valuable is you may look at this changing month over month, where your assets, which is your cash on hand, money that people owe you, and inventory that you have on hand, you know, and fuel I actually have on hand because I have this set up for a gas station in a demo, in this demo copy. So what this is saying that I actually have, actually I've got to fix this one little number because it's skewing it. But if I weren't looking at this, this would say 6,000 plus 7,000, or 6,000 plus 700 plus 20,000. So I'm looking at about 27,000 plus this 28, 29,000. Okay, that would be my assets. That would mean if I closed the doors today, I walked down to the bank and I took all the money out of the bank. I called everybody that owes me money and said, that's it. This afternoon you get down here and you give me cash. And I took every part that I had and I returned it back to the parts warehouse and they gave me cash back. Okay, so those are my assets. That would be what I would stuff in my purse at the end of the day and walk away with if I closed my business. Now the other side of that is, okay, so today's what, June 16th, I'm closing my business, I'm done, I'm walking away. And again, don't mind this number down here, guys, but let's say we had 27,000 in our pocket. The other thing I have to do before the sun goes down is I have to walk over to Napa, CarQuest, Factory, WorldPack, and I have to pay them $7 grand. So for my 27,000 I have stuffed in my purse right now, I have to pay out $7 grand. Actually, I have to pay out a little bit more. You know, when I add these two together, I pay out. So the balance sheet tells me if I were to end the business today, it means that I actually have 20 grand in my pocket. So I'm doing pretty good. Now, why this is important is that next month I may actually show up here that I have, you know, 50 grand. I may have 50 grand because I've got more money in my checking account. I've got, you know, I put a bunch of work on account. This guy's going to pay me this money. It's cool. I'm good. So I'm all excited to have 50 grand. And I've got, you know, and shoot, maybe I have, you know, let's say 10 grand of that. I brought in a truckload of tires. So I may have more in my checking account, a little more in my receivables, people that owe me, but then I show I've got 10 grand worth of additional tires back there that I didn't have last month. That's all fine and pretty, and this main number may say 50 grand down here, but then I may have a number down here that says 25 grand because I bought that much from Napa. I bought that much from CarQuest, and, you know, I bought that much in Nokian snow tires because I was gearing up for the snow season. So you can see why the liability is just as important, because what matters is, you know, once you take the good and the bad together, that's what you need to know to really know how well you're doing in your business.
So if we were don't forget page 2.
There we go. God love you.
Taxes.
So here we are. Yeah, so thank you. I just bumped to page 2. So here, talk about liabilities. This is all the money that I have included that I have to pay to the, you're right. So I go to the bank, I get my 27 grand, I go pay off my parts warehouses, and then I pay Uncle Sam. And, you know, we're not even going to talk about income tax because we don't want to bring that up here and ruin our days. But we do. We owe money to sales tax. You're right. Every day we're collecting up more money that we have to pay to somebody else at the end of the month. And this, we, you know, may have to pay it in 3 days. We may have to pay at the end of the month or the end of the quarter, depending on our size. So again, this is a liability that is important. You know, if you get to the end of the quarter and you've got to write a $4,500 check for sales tax and a $5,200 check for your income tax withholding, again, people kind of get caught up with just the income side, or again, managed by checkbook. I got money in my account. It's all fine and dandy till you get to April 30th, and you're like, oh my goodness, how am I going to do this? So that's why it's important to really be aware of this. And then equity, again, this is a demo system. But equity is really just year over year. If you want to talk to this, Rex, at all, I don't really pull this number into, I would say, my month-over-month management analysis, because I look at equity as more just something that you value your business when you're going to sell it. You know, if people want to see if you've got earnings year-to-date for 2007, 2008, 2009, 2010, you know, then they can use that to do evaluation of your business. So I personally, and give me feedback, guys, if you use it differently, I don't usually use this section too much when I think about how
your earnings year-to-date is different than your retained earnings from prior years. Your earnings year-to-date is really your bottom line in your P&L.
Right.
That 11,391 should exactly match what your net income is on your profit and loss statement. And so
let's look really quick.
That's a number in flux at all times.
Right. So let's look at that. That should be our number here. 11,391.81. Okay.
Yeah.
So I guess that's why I don't personally, and again, everybody's style is a little bit different, but since I've already considered it on my income side before I jump over and look at my balance sheet, I've already kind of thought that number through. But what I am concerned about is, yeah, this looks good, but usually where do I spend all my time? I look at my liabilities. You know, gosh, what am I going to owe at the end of the month? How am I going to be able to, you know, make that nut? I mean, it's a big deal. So that's kind of a little bit where you want to use this as your bottom line profitability. And it's a good, like I said, a good tool for making management decisions. Whereas the other profit monitor tools that we put in there, you know, you have an opportunity, you know, maybe not, how do I put it? You know, if you give a customer an estimate, you can only play with that number so much. But, you know, the thing is if you realize you're doing a job and it's a loser job, you know this here, then think to yourself, do I need to, you know, did it take more time for me to do work on it? Why am I discounting this radiator? You know, because remember I changed the part price. Remember it was I think it was like $350 or let's say it was $250. You know, if I'm going to go ahead and discount something, you know, sometimes you have to do it just because it's good business practice. But sometimes you have to hold firm. You have to hold firm to your prices and know that you're delivering value. Maybe what you have to do is, if you're going to hold firm to this number, or let's say you added, they came in for one job and the job was, you know, it was a $100 job. And in your mind, before you call that person and get authorization for the additional work, you know, you may be hesitating here. But you know what? It's worth it. You have to do, where the art of being a service writer comes into play, you have to be able to sell the value to that customer. So that's where this profit monitor really comes into play as you're adding to this, as you're finding more work, and as you're presenting it to your customer. You know that you are actually, what you're selling them to it for, $546.47, is got you on target. You know, and then if they say, you know what, that's just a little bit too much, now you can say to yourself, I'm at 59%. I got a little wiggle room. I got a little wiggle room. Or you may say, you know what, I lost my butt on this job. I'm going to go ahead and I'm holding tight on this number. But it gives you an opportunity before the opportunity is gone, before they've picked up their vehicle and made their payment. It gives you an opportunity on every single solitary job to know, did you get the most you could out of it? Are you charging a fair price? Are you hitting your targets? Because if you're not making enough money to stay in business, you're not going to be around to provide a great service to people. So it's not always just about the dollar amount. It's about providing good, fair service that you're still going to be able to keep your lights on. So feedback on this today, guys, kind of a quiet group, but I hope this was valuable.
One thing I like to do, like if I know the profit margin is going to be tight, I would increase the list price of it and offer a discount. So I'm showing that I'm giving them a discount off of, you know, the price.
Right.
And still making my profit on the part that I need to make.
Right. I agree with you. If you're going to, if say you need to sell this part for $250, but it was normally, $300. Get credit for it. What 15% get us about there? Yeah, get us about there. So of course I'm still profitable, I know, but even if we were going deeper, let's say it was $250 and I'm going to discount it $10. You see, I'm not quite as profitable here. But I am a big believer in if you're going to give a discount, get credit for it. Get credit for it. Yeah, good input. Who else was asking a question out there? I had a gal making a comment.
What about the MaxxBucks? How does that get incorporated into the the profit margin on the repair order? Does that get taken into account?
Brilliant question. Really appreciate that. Keep in mind that the actual MaxxBucks for this customer, okay, so right now I show $19.66 in MaxxBucks. This number is not tracked or considered financially anywhere in the system. Because it happens to be a dollar amount, it could be a point system, it could be whatever you want. It is not, excuse me guys, it is not financially considered anywhere. When it comes into play is when you go to pay this ticket and let's say it says we want to use MaxxBucks available. This, excuse me guys, I'm a little congested. This is a discount. So yes, it will affect our number here because, look, I haven't applied this 1966 right now to this 57%. But if you look at it more, this is a tough call and a very, very, very good question. Let's say I were to take this 1966 and actually put it in as a discount. So I'm going to hit cancel. I'm going to go back under miscellaneous and put that in. Let's make it all under labor. So we're at 57% right now. Let's see what it does to us. It bumps us down to 55%. In my mind, I would not look at that so much as I'm losing, what is it, 57? I'm losing 2% of profit on this RO. Whenever I think of MaxxBucks, I think of it as a marketing cost. It's a cost of acquisition for this customer. And keep in mind, where does a discount, whether it be a MaxxBucks or a discount here, where does that show up on our financials, guys? Let's look. Under General Ledger, under Income Statement. Discounts show up under expenses just like rent. Just like your wages show up as expenses, just as your lease, rent, and building shows up as expenses. Well, this is my least favorite, but everybody pays it. Credit card discount. You pay $1,000 a month in credit card fees. That's the cost of doing business. And frankly, that's where those sales discounts show up. Whether I discount, remember, whether I discounted that radiator from $250 down to, what was it, $180 or whatever, $195, whether I discounted it there or whether I discount it with MaxxBucks or whether I discount it under the miscellaneous tab where I can put in a manual labor discount or manual parts discount, that always falls under an expense. So what that's really telling you is it's a cost of business in the form of goodwill or marketing. I mean, really, what is MaxxBucks? It's a customer retention product. It's a marketing tool to get them to come back yet one more time, yet one more time, and yet coming one more time. So the whole idea behind that is that when you think about when you're actually finishing up your RO and you're thinking, what's my profitability on this RO? 57%. I really, in my mind, I don't take into consideration the MaxxBucks because you always have the option that customer says, you know what, save my MaxxBucks. I'm going to use it next time. Well, I got a transmission coming up on my truck, on my pickup, so I'm going to let my MaxxBucks accrue. So look at it more that way. Great question. So no, that does not show up anywhere in the system, especially not on your balance sheet. It's not considered an asset or a liability because, again, what happens when I close the door and I stuff $27,000 in my purse and I go pay my parts place and go pay Uncle Sam? I don't owe MaxxBucks people anything, right? The MaxxBucks is not a dollar amount that when I close my door today, I'm going to have to pay out to anybody. That's why it doesn't show up on our financials under our P&L or under our balance sheet. Does that make sense?
Yes.
Good. Good question. Thank you.
So do the MaxxBucks flow to the sales discount financial? Is that where they go when you use them?
Yes. Yes. Yeah, because they actually are the same as this. They actually are exact same as putting a discount here. They do. So let's say it's $517.92. What was it? $19.66. It's the exact same amount. The system just does it more in the background, but the net is always going to be the same because you're actually, what are you really going to collect from the customer? $498.26 when you pay the bill. So let's look at this here. Great question. So let's go ahead and save and let's pay it out. So here we are, $517.92. Pay. Yes, I want to apply my MaxxBucks. Okay. So look at what we're accounting here. Now the reason why I went from $498 to $495 is because MaxxBucks apply to parts first, and of course parts have sales tax. Does that make sense? Mm-hmm. You want to revisit that one at all? Okay, real quick.
No.
Discount labor, no tax. MaxxBucks taxed. See, 1966. If we put it all here, that's where we get to 495 instead of the 498. If we were to put it under labor, just to be real clear. See?
Sabrina, does it charge the tax on the actual cost of the parts or after the discount?
After the discount. Sales tax is charged after the discount. Because, that Uncle Sam or our sales tax, our franchise tax board, franchise tax board, they don't care whether or not you're listing a discount or not. All they're caring about is that you're selling, what's our summary? Is that you're selling, this dollar amount in total parts. They don't care about how you break it out. They don't care whether or not you show a discount. They just want to know when that customer walks out the door, how much did he pay you for your parts? And by the way, that's how much we want in sales tax. So very, very good question. Good questions, guys. Anything else before we wrap it up today?
Does the warranty flow through the same way as the discount?
Yes, it does. It is treated exactly the same way with one exception. So Uncle Sam sees it the same way. Customer sees it the same way. We still are going to pay $498, if we apply a discount for warranty. The difference is, and I actually love this, on our income statement, it is, do I have one? No, I don't. Let's create one. But what will happen, it'll say financial, warranty discount, which is, again, another phenomenal management tool. Okay, so let's see. I'm gonna do this really quick because I want you guys to see this. So if I were to, let's say this brake job, that's 100% warranty. See, if I check this box, and the reason why I check this box and I'm doing the warranty here is to tell the software program to put it from financial sales discount. We're saying, I want it to go under financial warranty discount. So I'm discounting this out 100%. So we're going from $498 to $292. We're talking about a happy customer. So let's apply that. That's good. This is just an example. So now when we are looking at our report, general ledger, love real time. Now when I look at my expenses, I have this financial warranty discounts. So what is warranty discount? It is an expense just like your rent, just like rent. Now what's another interesting tool is that, sometimes you look at these sales discounts and some people may discount $3,000 a month. And people sometimes get all up in arms about this, especially if you're an owner and your service writers are doing sales discounts all the time. And I'm a strong believer. I don't want credit for it. But, it's just a smoke and mirrors. It just means that we're trying to get credit for $3,000. We're showing that we made that additional $3,000 up in our income side, and we're just zeroing it out by saying, well, $3,000 we expensed it out. It's not like we ever really got that money anyway. But what's kind of neat is that if your warranty discount for 1 month is, you've got $4,500 in warranty discounts, you may be saying, hold the bus. What's going on here? Do I have a problem? Do I need to go back and see, is this something that my one particular technician is causing all the warranties. Shoot, maybe it's a particular part failure. Maybe it's the summertime and we've had, I don't know, you could jump in on this one, Walter. You have air compressors that you realize that you've been using these, AirTech or whoever you get the part from. You may be noticing that you're having a lot of warranty discount. Well, when you go back and do a little research, you might want to go back to that parts supplier and say, guys, I've been taking in the shorts here for a lot of warranty discount, and I'm going to make a claim. I want to make a claim here. Because so it's a great question, guys. What do you guys do if you get a warranty refund on labor? What do you do if you get a warranty refund on labor from a parts supplier? Where do you put it? A couple different ways to handle this, Rex, if you want to jump in on this. But I put the credit under here. It just lowers my expense. It's really not income. It's just saying I'm just taking a little less than the shorts under warranty discounts because, the parts supplier is shouldering the burden of my warranty jobs. Make sense? It's where you would do like a cash in, for example. So you get a refund for a labor claim. You would do a cash drawer, non-invites cash in, and you would create a field in here that says, I'm not a big fan of miscellaneous anything, but I would say warranty claim. And that, of course, would make would show income going into that expense account, which would do what? It would lower that expense account. So that's the way I would handle it.
What happens if they're just crediting your account?
You still have to, if you enter it in, you would go in under the vendor, go into their account. Really great question, too, thanks. Is you would actually just go in here and create a new credit. And it's going to go against your payables, and you would just offset it. Let's just put in $100 warranty claim. You would just offset it to that $60,000 account. Whoops. Typing wizard that I am, guys. Financial warranty discounts. See? That's how I would handle it. So then that would show up as a credit. And I would just use that when I tag my bills and make say when I go to tag my bills and make a payment, there it is, $100 credit. I just tag it with everything else when I go to pay my bills. So that's how that would be handled.
Got a whole shelf full of them out there.
Okay, guys, any other questions? You had some good ones here at the end. I appreciate it. Okay. Well, we're going to go ahead and wrap up today. If you haven't, I will send a follow-up email if you guys have any more directed questions or if you have a particular scenario that's going on in your business that you want to talk a little bit about how to set up some of the profit monitors, some suggestions. We actually, I use a lot of information just from my personal experience working for a lot of different shop owners as well as our own shop, and then input that we receive from different automotive management companies or consulting companies. They have a lot of good ideas too. But that profitability monitor is something that really is a personal thing, and again, I cannot overemphasize, it is a guideline, and it may be something that you may change every 3 months. You may want to fine-tune it a little bit more. You may end up, realizing that I need to go in here and I actually need to play with this number a little bit more. So that's just it. Or, hey, you may decide that we are doing a truckload of sublet work, and that is actually, maybe costing us more than it should be. I don't know. Don't forget there's not a lot of overhead costs to sublets, so that's kind of nice. It's not like you have to pay wages and payroll taxes and all that kind of thing. But you may find that you're not getting quite as big a margin. So this is something that I would say changes over time. And because it's a personal thing, try it out a couple different ways. And again, what's the whole idea? It's just to make you guys profitable in the end. Well, I appreciate your guys' time today, and I look forward to seeing folks next week. We are going over the sales tax setup and a little bit about sales tax reports next week. It's going to be more a bare bones, nuts and bolts about how to use the system, but there are a few folks that have some questions or concerns about that we've had in our tech support forum. So we're going ahead and have that webinar just to do more of a Q&A. So I could see me talking for about 15 minutes on the actual feature itself, and then just doing a lot of Q&A, whatever you guys are wondering about the feature or how to customize it for your personal needs. Okay, guys, well, have a wonderful week, and we'll see you next time.
Thank you, ma'am. Good job.
Okay. Bye, guys.
Bye.